Freelance taxes aren't complicated. They're just explained badly, on purpose, by people selling you something. In the next 8 minutes, I'm going to make you dangerous enough to never be surprised by a tax bill again. Here's the deal. You're great at your actual work. Taxes feel like a second job you never applied for, so you avoid them until April mugs you. Today I'm giving you the whole picture in 4 plain English pieces. What you actually owe, the sneaky tax nobody warns you about, how much to set aside, and the 4 dates that keep you out of trouble. And piece number 2 is the one that catches almost every new freelancer, including probably you. Stick around for it. When you had a job, your employer quietly did 2 things. They took taxes out of every paycheck, and they paid half of your Social Security and Medicare for you. As a freelancer, nobody's doing that. The full amount hits your account, and you're now in charge of sending the government its cut. You didn't get a raise. You got a new job. Part-time tax handler. Say a client pays you $5,000. As an employee, taxes were already gone before you saw it. As a freelancer, all $5,000 lands in your account looking like a party, but a big chunk of it isn't yours. It's the government's, just sitting in your account waiting, spending the whole deposit like it's profit. That $5,000 feels like $5,000. It's more like $3,500 of actually yours. Treat the gross like the net, and April becomes a horror movie. There are really 2 taxes on your freelance income. One you expected, regular income tax. One you probably didn't, self-employment tax. That's Social Security and Medicare. At a job, you paid half and your employer paid half. Now you're both, so you cover the whole thing. As a rule of thumb, that self-employment piece runs around 15% of your net business profit on top of income tax. Let's say after expenses you profit $40,000 in a year. The self-employment piece alone could be in the ballpark of $5,600, roughly 15%, before we even talk income tax. That's the number that turns into the scary April letter when nobody planned for it. But here's the catch that softens it. You generally get to deduct half of that self-employment tax, and your business expenses lower the profit it's calculated on. So good record keeping literally shrinks this bill. Only budgeting for income tax and forgetting self-employment tax exists. People set aside 12% thinking they're safe, then get hit with nearly double. Plan for both from day one. Forget perfect. You want a safe, simple rule you'll actually follow. For a lot of freelancers, setting aside 25–30% of every payment for taxes is a solid starting point. That covers federal income tax plus self-employment tax for many people in the early income range. If you're in a state with income tax, lean toward the higher end or a bit more. Back to that $5,000 client payment. The second it lands, you move 30%. That's $1,500 into a separate taxes account. You never see it as spendable. Do that all year, and when taxes are due, the money's already there. No panic, no payment plan, no April horror movie. You just pay it. Boring. Beautiful. Keeping the tax money in your main account and remembering not to spend it. You will spend it. Every freelancer does. The fix is physical separation, a second free checking account labeled taxes so the money is out of sight. Here's a thing that surprises people. The IRS generally doesn't want to wait until April for your money. If you expect to owe a meaningful amount, you're usually supposed to pay taxes 4 times a year. That's called estimated quarterly taxes. Roughly, spring, summer, fall, and the following winter. Miss them and you can get hit with small penalties, even if you pay in full later. This is where that taxes account becomes a superpower. You've been moving 30% all along, so 4 times a year you just send a chunk from that account to the IRS. Online takes 10 minutes. You're not finding money. You already saved it. The quarterly payment is just hitting send. Ignoring quarterly taxes your whole first year because nobody told you they existed. Then owing the full bill plus a penalty in April. If your income is new or small, talk to a pro about whether you owe them yet. But get the dates on your calendar now. So here's where you are now. You know freelance income is gross, not yours to spend. You know there are 2 taxes, income tax and that sneaky self-employment tax. You know to move 25–30% into a separate account the second you get paid. And you know the IRS wants it 4 times a year, not once. That's freelance taxes. Not complicated, just explained badly everywhere else. Do these 4 things and April stops being a threat and starts being a Tuesday. Don't leave without the free tax bucket calculator. It does the percentage math for you so you never have to guess. Links right in the description. And if this finally made taxes make sense, subscribe. Because next I'm breaking down LLC vs sole proprietor. Do you actually need one? Most freelancers get talked into the wrong answer and pay for it. That video's right here. organic, and if you want the second account and set aside thing to happen automatically, the banking/accounting tools in the description can auto-split every deposit for you. Totally optional, but it's what I'd use.